Michael Burry is a legendary, enigmatic investor whose moves and predictions are closely watched and followed by millions of people around the globe. Today we will look into his recent bets and companies he decided to invest in. If you're interested in finance and economics, stay with us until the end. But before we dive into the story, make sure you like and subscribe our channel to receive updates as soon as we share new videos. Bubble and collapse. Alright, so let's start with the early story of the big short investor Michael Burry. As you know, Michael Burry made a bold bet against the housing market that really put him on the map. He believed that the subprime mortgages being issued to risky borrowers were a ticking time bomb, and he was willing to put his money where his mouth was. Turned out, Burry was right. In 2008, the housing market collapsed and the subprime mortgage bubble burst, causing a ripple effect that led to the worst financial crisis since the Great Depression. The bet earned him $100 million and $700 million to other investors. But that's not all. He's a complex and fascinating individual. So if you're ready to learn more about the man behind the legend, keep watching. 2023 Market Crash Prediction. Burry uses Twitter for his predictions, and his tweets have generated significant attention and have been widely shared and discussed amongst investors, journalists, and financial advisors. For example, in his first tweet this year, Michael Burry said, "Inflation peaked, but it is not the last peak of this cycle. We are lucky to see CPI lower, positively negative in 2H, second half 2023, and the US are in recession by any definition. Fed will cut and government will stimulate, and we will have another inflation spike. It's not hard." In this tweet, a well-known former stockbroker and private wealth management trader and advisor, the Cheeseman TX, replied that people needed to track what holdings Scion Asset Management holds. According to Burry's predictions, it will be wrecked again after recovering from the first crash this year. Economists surveyed by the Wall Street Journal in October also pegged the probability of a recession occurring within 12 months at 63%, up from 49% in July. This survey has further strengthened Burry's predictions of a stock market crash. Why Burry sold his stocks? Michael Burry's Scion Asset Management had 11 stocks in the first quarter of 2022. However, in the next quarter, Burry sold all his stocks but only one. It is also essential to know that the hedge fund manager had already predicted a market crash. Investment in Geo Group. As of the last year's second quarter, Michael Burry's financial portfolio showed the purchase of Geo Group stocks worth $3.3 million. This group offers private prison services. The reason behind this investment is that the United States has the highest prison population of any country, with 1/4 of the world's prisoners housed in US facilities. They had a balance sheet of $588 million in cash and cash equivalents. Why only one position in Geo Group for a long time? It's not entirely clear why Michael Burry specifically chose to invest in Geo Group. However, it is likely that he saw potential for profitability in the company given its business model of profiting from a high number of prisoners, and its history of growth in recent years through detaining migrants on behalf of the US government. It is also possible that he believes that the US government will continue to invest in expanding enforcement agencies, causing the number of prisoners to double or triple even as the economy deteriorates. Burry's remaining 5 holdings. Scion Asset Management currently has 6 holdings worth $41.3 million. One of the other companies that Michael Burry invested in is Curate Retail, a holding company for various retail-related subsidiaries and brands such as QVC and HSN. The company has a strong and diverse portfolio of brands and generates solid revenue streams, which is equal to $11.8 billion. This company is one of the biggest players in the defense and space industry and likely to benefit from increasing military and space spending by the US government. Over the past year, the S&P 500 is down 20.96%, while AJRD is up 19.79%. AJRD earned $1.14 per share over the last 12 months, giving it a price-to-earnings ratio of 49.11. $81 million in operating income, and $1.8 billion in adjusted operating income before depreciation and amortization in 2021. The company is likely to benefit from increased demand for telecommunications services in the region. Conclusion. In conclusion, Michael Burry's investment advice has been incredibly valuable for those looking to build a successful portfolio. His emphasis on understanding the fundamentals of a company and its industry, as well as his willingness to go against the crowd, are key lessons for any investor. We hope that you have found this video informative and that you will apply some of Burry's investment strategies in your own portfolio. Thank you for watching.